A man was going on a long trip. He called his servants and entrusted his money to them while he was gone. To the first one, he gave 5 talents. The second, he gave two. And the third, he gave one, and he gave them according to their abilities. Talent in this case means money. While he was gone, the servant who received 5 talents began to invest the money and earned 5 more talents. The servant with 2 talents, he also went to work and he earned 2 more. But the servant who received just 1 talent, he dug a hole in the ground and hid his master's talent. After a long time, their master returned from his trip and called them to give account of how they had used his money. And of course, two of the servants were glad to report that they invested the talent and they got good returns. The master was happy with them and he gave them even much more. However, the third servant said he was afraid he would lose the money. So he decided to dig a hole in the ground and he hid the money. And so he gave his master the exact 1 talent he had received. No interest, no gains. The master replied, "You are wicked and you're a lazy servant. Why didn't you deposit my money in the bank? At least I would have gotten some interest on it." Verse 29 of the Bible chapter says, "To those who use what they have been given well, even more will be given to them, and they would have an abundance. But those who do nothing with their money, even the little they have will be taken away." Hello, everyone. Welcome back to Talents and Treasures with Tola. Today, we're diving into letter I. I as in investing. Investing. Most people work hard for their money, but the wealthy, they make the money work for them. Investing is the key to growing your wealth, protecting yourself from inflation, and achieving financial freedom. So, whether you're a beginner or you're someone just looking to level up your investment game, this video will help you understand where you can invest your money and how you can do it wisely. So, let's get into it. Investing is not just about making money, it's about building wealth that works for you. One of the most powerful tools in investing is compound interest, and we spoke a lot about that last week. Albert Einstein called it the eighth wonder of the world. Let me show you why. If you invest $10,000 at an annual return of 10% in 20 years, that money grows to $67,275 without you adding a single dollar. That's the power of compounding. Your money makes money, and that money makes even more money. So, going back to the parable of the talents as told by Jesus in Matthew 25, verses 14 to 29, the first and second servants doubled their money because they invested it. But did you notice that it wasn't immediate? It took a long while before they could earn some money from it. The master was angry with the third servant, stating that the least he could have done with his money was to put it in a bank to get some interest. So, if for some reason you can't invest right now, please ensure that you have at least a high yield saving account so that you can get some interest, even if it's small. Now, investing can be done in two ways. The very first one I want to talk about is the short term trading. This involves buying and selling of stocks quickly. This can be risky and it can lead to losses if you're not very knowledgeable about the stock exchange or short term trading. The second I want to talk about is long term trading. This method allows your money to grow steadily over time and it's the most proven way to build wealth. That was what the first and the second servants did. They invested their money over time. Now, let's talk about the different ways you can invest your money. The very first way is to buy stocks. Stocks. When you buy stocks, you are buying a piece of the company, As the company grows, your investment grows as well. Stocks have high return potential, but they can be very volatile. They're great for long term investors that are willing to ride out market fluctuations because they do fluctuate. Number two, exchange traded funds, ETFs. ETFs are like a basket of stocks. They allow you to invest in multiple companies at once. They provide diversification and they're less risky than buying individual stocks. These ETFs are perfect for beginners who want to invest in stock market but they want to experience very less risk. Number three, mutual funds. A mutual fund is a professionally managed investment where your money is pooled with other investors. Fund managers pick and choose the investments for you, and mutual funds are good for people who want hands-off investing. Talk about passive income. Number four, real estate investment trust, REITs. REITs allow you to invest in real estate without owning physical properties. They pay dividends and they provide passive income. Again, passive income. This is great for diversification without the hassle of managing properties. And number five, real estate. Real estate. This is buying actual property, and this can be very powerful. It can be a very powerful way to build wealth. You can rent out the properties for steady cash flow, or you can sell later for appreciation. This requires a larger upfront investment, but it can provide long term security. Number six is bonds. Bonds are loans that you give to companies or to the government in exchange for interest payments. They are lower risk. They have lower risk than stocks, but they also have lower returns. Lower risk, lower returns. This is ideal for conservative investors that are looking for stability. You might be asking, so what do I do? Let's talk about risk tolerance. Remember when we spoke about money personalities in week 3? And even if you took the test and you don't identify as an investor, that doesn't mean you cannot invest. You just need to understand your risk tolerance and invest appropriately. And please, 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 do not invest in anything that you do not understand. Before you invest, make sure you understand the dynamics of the investment. Not all investments are for everyone. Understanding your risk tolerance is key to making smart decisions. Let's talk about three types of investors, three types of risk tolerance. The first is aggressive investor. High risk, high reward people. They're typically young professionals who have time to recover from losses. They prefer stocks, ETFs, and real estate for high returns. Then we have the moderate investors. These are the people that want to balance the risk. They prefer a mix of stocks, of bonds, and real estate. They typically invest in ETFs, mutual funds, and REITs for balance. And the third category is the conservative investors. They are the low risk, low returns people. Typically, these people are nearing retirement or they're just very risk averse. They favor bonds, dividends, stocks, and REITs for stability. Now, regardless of your risk tolerance, diversification is key. Never put all your money in one place. Do not put all your eggs in one basket. Spread your investments to reduce risk and to ensure steady growth. As I round up this video, investing isn't just for the wealthy, it's for everyone. The sooner you start, the better. Here's what you can do. You want to assess your risk tolerance. You want to know if you're risk averse or you're able to take on some risk, or you want a balance. You can start small, even with just $50 a month. It can grow into something big. And you want to stay consistent. Ensure you're consistent and you reinvest your earnings. Remember, the best time to start investing was yesterday. The next best time is today. So please take charge of your financial future. If you found this video valuable, be sure to like, to subscribe, and to share with someone who needs to hear this. Let's build wealth together. Until next time, stay focused, stay consistent, and stay empowered.